Hey everyone, Couch Investor back to another video for today. So, the Dow Jones is in a bear market. How do I know that? Well, if you look at the chart here, it's now down 22% since its peak. And if it's over 20%, then officially it is in a bear market. Now, if we look a bit closer, we can see that it is now currently a bit oversold. And obviously the MACD is not such good news either. A reversal is not around the corner. Now I do want to show you one last thing, and that's the gap here, November 2020. It's a gap that was never filled. Close in June 2022, but now it is halfway there. We're half filling that gap. It can go a little bit lower around that, 28,400 and something to fill that gap. Again, there is this myth, all gap must be filled. Not all gap do get filled, most of them do. So with that said, I want to show you two stocks that you might be interested in buying in the month of October. Two stocks that are obviously part of the Dow Jones. Now, before we do that, if you want to support me and this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Make sure to check out all the other links in the pinned comment. Now, of course, there's no better time to start investing than in a very, very bad and red market. So make your money work. Obviously, have a long-term vision, because if you need that money in a month from now, 3 months from now, well, just don't start. Now, stock number one might surprise you, and that's Home Depot. It's the largest home improvement chain in the United States. And what makes this such a good company, besides the fact that it keeps on growing earnings year over year and keeps on buying their shares, which we're going to have a look in just a bit, they're scaling faster than their competitors. They've been doing so for the last decade, not just after this pandemic or between 2020 and 2022, but they've been doing this for quite a while. They've evolved digitally as well as physical stores. Now, of course, for those of you that follow this channel, you know where I'm at here. I'm on stockcard.io. Link is down in the description if you want to follow this channel's portfolio. It's free to follow. Why not? You can also enter a competition for free. If you win it by creating a portfolio and beating everybody else, by the end of the year, if you win it, you get $250 in cash. Again, it's free to enter, so why not? So Home Depot, right now, limited growth potential. Of course, it's not a high growth company, but if you need something stable and something that will be around for a long time, and maybe it's not a high growth company, but it is paying a dividend. It's a strong dividend paying company, and it pays 2.75% yield. Earnings per share 16.35 and growing yearly. Now, of course, it is down from a year ago, down close to 16%. If you look at the 5 years, it's up 66%. Now, looking at what analysts are expecting, the average analyst price target sits at $327, which is 18.65% higher than the price today. And as I said just before, it might not be growing at triple-digit rates or high double digits, but as you can see, over the years, it has been growing revenue quite nicely. Free cash flow in the last 12 months, over $10 billion. That's also growing quite nicely over a long period of time. Gross profit margin that has been coming down. It sits now at 33.53%. Still quite nice there. And this is basically the biggest, let's say, bullish point for long-term investors that like to have growing companies and dividend-paying companies as well, which is, well, the outstanding shares have been going down throughout the years, which is great because if you own shares, that means that they have to pay out dividends to fewer shares, which means more money for you. And now I know this channel is known for tech stocks, high growth stocks. So what am I doing here with Home Depot? Well, because I do think that probably a lot of my viewers do have dividend paying companies, stable companies such as Home Depot. So I thought, hey, maybe right now might actually be a good time to add such companies into your portfolio. Obviously, do share down in the comments below if you own any of these stocks, especially Home Depot and the next one, which I think a lot of us do hold it in our portfolio, and that's the House of Mouse, Walt Disney. So Walt Disney, obviously it's no secret what they do. Again, on stockr.io here, strong growth. Yes, it's not paying a dividend anymore, although my predictions still stand, I think by 2024, 2025, when they hit their goal for Disney Plus, their subscription goal, I think they'll start paying a dividend back again. So 2 to 3 years time, I think we can see dividend payouts again. It says here it's overvalued right now. It's true, but it is still recovering from the hit of the pandemic, plus all the investments in Disney Plus. So I won't really look at this metric as I would have done a couple of years ago when looking at Disney without Disney Plus. Now the stock has taken a hit as well. It's down 44% in a year, but the analysts are pretty bullish on the company. Average analyst price target $145.53, which means 54.28% upside. Not too bad. Now, two extra things here with Disney is one, that it named Carolyn Everson to board of directors. Bank of America lowered their price target from $144 to $127, but they are keeping their buy rating on the shares. The analyst lowered her estimates of fiscal Q4 revenue to $21.7 billion from $22.2 billion to reflect lower projected Disney Plus net adds of 8 million, down from 15 million previously, along with lower content sales licensing revenue and the impact of Walt Disney World closures for Hurricane Ian, which I believe was closed for 2 days. So obviously it will impact because those are 2 days that are taken away from this quarter. And last thing here, we have a new president of Disney Plus, Alyssa Bowen. She was previously EVP of Global Business Operations for Disney Streaming, overseeing global content and business operations for the company's direct-to-consumer video streaming businesses, Disney Plus, Hulu, ESPN Plus, and Star Plus. So quite a nice addition there. And then lastly, I want to give a big shout out to Economy App for creating this and sharing this on Twitter. So this is basically how Disney makes money. This is from Q3 fiscal year 2022, so revenue 21.5 billion. Where does that come from? So we have media entertainment, linear and direct to consumer. Linear, that's Disney Channel, ESPN, ABC, National Geographic. Direct to consumer, Disney Plus, Hulu, ESPN Plus. Then you also have content sales and licensing, Pixar and Marvel Studios. And then on the other side, you have parks, experiences, and products. That's $7.4 billion. So obviously parks and experiences. So Disney Parks, Cruise Lines, and Vacation Club. And consumer products, well, the consumer products. On the other side, you have gross profit, which is $7.8 billion. Operating profit with a 10% margin, $2.1 billion. Segment operating profit, $3.6 billion. Which splits media 1.4 billion and parks 2.2 billion. Then you have this big chunk here, cost of revenue, $13.7 billion, operating expenses of 5.4 billion, which is 4.1 billion in SG&A, and $1.2 billion in depreciation and amortization. I think this is a cool way of visualizing how a company makes money. He shares many of these graphs on Twitter, so make sure to give him a follow. So to conclude, obviously I do own Disney in my portfolio, and as I stated in the past videos about Disney, yes, I don't like it when Disney or any other company starts playing political games, and my view on that stands today. But overall, I do feel that with the price of Disney stock coming down under $100, I do think it's a great pickup, especially coming into the later half of this year. And Home Depot, well, right now, unfortunately, a lot of people will have to maybe rebuild their home, rebuild their stores as well because of the hurricane in Florida. So that might be a tailwind for the company. It's unfortunate, but what can you do? So these were the two companies I wanted to touch on in this video. Obviously, do share your thoughts down in the comments below. And what companies are you looking to add in the month of October? Don't forget, earnings season is starting pretty soon. So maybe you would like to have some cash on hand when some companies might report good earnings, but the stock market decides it's not good enough. So the price will drop. That's just part of the game. So if you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I'll see you all in the next one. Bye bye.